Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome all of you. And as some of you mentioned, it was a crazy day today. You're right. Just what part is what we should ask. We also have Ben Watson in the chat. We welcome him and all of you. Gary, Grace, Kevin, Josh. Okay. Josh is here. We can get started. And also Lawrence and many others. A little fun with Josh there. Now, just real quick as we get going, some of you are brand new. This is your first time you've ever been in a live session. They are live. They are also recorded. I'll share with you those links where you could find our class playlist so that way you could follow along with future and past classes as well. Now, just real quick as we're getting started, remember the information provided here is done for general informational purposes only. Also, Schwab does not recommend the use of technical analysis as a sole means of research. So we have a class like this where we talk about the fundamentals, okay, and also the technicals. And also when we bring up the technicals, we're talking about price and volume. When we're talking about, let's say, fundamentals, we're talking about income statements, balance sheets, cash flows, things like that. We kind of really want to know the health of the company, and might that lead to a trend. Also remember that when we show examples, we will use the Paper Money software application. And also remember that investing in stocks involves risk, including loss of principal. Now, today, we'll take a look at where the markets are. Some of you mentioned already a pretty big day. We'll kind of show that when we talk about indexes and sectors. There's really some areas that are doing fairly decent, but there's also some areas that are severely lagging, okay, or got hit. And I want to kind of talk about what the style differences we're seeing between growth, value, and income. There's kind of a real, right now, a focus for a chase for growth type of style or strategies. We'll talk about some of those growth names here today that might be on the move. So we'll look at the fundamentals of those and the technicals, and let's dive into that. So first off, I like to always bring this up. I'd like to kind of show a routine, what we like to look at. Me personally, I like to look at a list first, okay? The list that we're looking at is just looking at indexes. This is just a list I made, okay? And what you're going to notice is we always like to kind of see what type of trend do we have, okay? So when we talk about trend, okay, we talk about the SPX, you look at the NDX, those are trend 3. When we look at, let's say, the SPX and the NDX, those on the RS5, the relative strength over the last 5 days, those are the ones that are really the strongest. Really, the NASDAQ has actually kind of been the bellwether, I should say it like this. It's been the most consistent in different durations of time. 5 days a week, 10 days, 2 weeks, and so on. 21 would be 1 month, 42, and 63. It's the NASDAQ that's really been leading quite strong. We're also seeing setups on the NASDAQ from close above the high of the low day. We're seeing a 20-day high, a 55-day high. And so when you're kind of getting multiple alarm bells going off like that, it kind of tells you that the move is probably quite strong. Now, so far, we're seeing that the VIX, the volatility index, down, and we're still in that one condition. Now, remember, if you want the market to go up, that's not necessarily bad. You like to see the VIX falling and staying down. Now, remember, like what we said yesterday, we're going to continue to watch the VIX, make sure it's not breaking out. We talked about that divergence yesterday. Continue to keep an eye on that. Let's take a quick look at what these look like. When you look at the NASDAQ here, we have a brand new high on the NASDAQ, okay? And that was that continuation of what we saw before. Let me drop something off here on the bottom there. There we go. So if you take a look at that, what we're going to notice is brand new breakout on the NASDAQ. Now, it gapped. We closed here, and then we gapped. The intraday low on the NASDAQ was almost the open, and then we just pushed higher. Type in the chat if you like that. Okay? If you don't type in the chat, you didn't like it. Okay? Now, when you look at the SPX, is it that bad? Is it that far behind? No. I think this is the 54th new high we've seen for the year, 54. Okay? I might be wrong. It might be 57. When you get up past 50, I don't think it matters anymore. It's just been a whole lot of them. And if you take a look at that, brand new high there. The Dow Jones, we'll talk about that. They had CRM last night on earnings right there. A little bounce back on the Dow. Not bad performance. It did make a brand new intraday high. Just doesn't look the same, but still bullish, right? And if you look at the Russell, you're going to kind of see that that's the only one that's kind of not really involved in the party right now. Now, when you really go back to, let's say, just briefly, the sectors, okay, Now, if we went back to just briefly the sectors, this is where we kind of said it's really the tale of which sectors are going up and which ones are kind of getting left behind. Well, remember, when we look at these in terms of the trend, okay, the ones that are trend 3 are technology, okay, IXT, discretionaries, okay, and you got communications. Those have been the 3 that we've been talking about since Monday. They've stayed the same. And what you're going to notice is when we look at the RS5, you're going to see that those are the sectors that have been the most consistent. Now, I don't normally talk about communications that much, but since we do the ETF class on Friday, I do bring that up. I put that in here. Nevertheless, if we talk about tech and discretionaries, they have absolutely whipped, okay, all the other sectors when we talk about relative strength over different periods of time. Now, here's the deal. It's not that some of these sectors are completely bearish, but when you look at their performance relative to the S&P, they're underperforming, okay? Now, speaking of that, let's kind of put in here the SPX for a benchmark, okay? And so we want to kind of look at the performance of the SPX and then compare it to the rest. Let me tell you what I mean by this, okay? So when we look at the benchmark, let's say that the SPX was 1.44 for the week. There it is. So what you're going to notice is IXV, the healthcare, is at 0.79. So it's not down. It's just underperforming. Now, Staples, 0.12, a tenth of 1%. So it's not down for the week. It's just underperforming. And if it's underperforming, it gets those red colors, right? If we said, hey, this one being 2.63, it's red, okay? So we're trying to find things that are not just the benchmark, trying to find something that's outperforming the benchmark. But it doesn't mean if someone bought healthcare or Staples that they're horrible. They're just underperforming the benchmark. Okay, now let's kind of talk about this just real quick. One area that you mentioned in chat that we really did see a real drop severely in energy stocks. Now, to my understanding, I have to double check. I don't think we have any energy stocks. We might have one XOM. Historically, we had Chevron. I don't think we have that anymore. I think we just have Exxon, and that's it. So right now, we're kind of seeing 2 indices really lead, Dow being the third, maybe, okay? And then you really got 3 sectors if you include communications. Now, the biggest thing that we like to see in a strong upward trending market is market breadth, right? Wider participation in sectors. So when we start to see, let's say, a narrow pocket of sectors like this, things could be running on fumes a little bit. Doesn't mean that the investor can't trade those, but they're definitely watching those support levels, adjusting stops, and all the things we mentioned yesterday on that. Now, what I want to do is I want to kind of talk about just briefly some of the action that we're seeing in the Dow space, and let's kind of focus a little bit on a couple stocks that kind of stood out to me, okay? So first off, we know we have stocks like Verizon and Coke and Johnson & Johnson. Those are not typically your growth stocks, okay? Now, what I want to show you here is when we go to some of these names like Coca-Cola, you just kind of see a bath to the downside, just kind of falling over pretty aggressively. You go back and take a look at, let's say, VZ, a pretty big drop on VZ. I mean, look, not down 10%, but pretty large. And then when you look at Johnson & Johnson, that is a lower low. Some of you mentioned today that you were maybe looking at that for a bearish example. So my question to you first is, why are some of these income plays-ish, higher dividends, why are they underperforming so much? Now, when you get some of these other areas, example given like CRM, that smashes to the upside, areas, for example, like NVIDIA, punching to the upside as well, why all of a sudden are you kind of seeing some of these yielders underperforming and selling off, okay? And the growth names that are doing quite well. Not all, but many of them. So sometimes what happens is people say, look, if they have a finite amount of capital, they might say, look, I want to try to go for some of these growth names and really go for something that might have more trend, okay? So if the goal was to move the portfolio forward, those yielding names, it's not that they've been horrible for the year, but just they're underperforming right now. And some people might be shifting those assets to where we're really kind of having more growth. Now, I want to kind of show something just real quick. So from a just quick point on technical analysis, let's kind of bring up when we talk about the NVIDIA, we're going to bring up, now don't worry, we're going to do a number of examples here. And what I want to do is I want to pull up just the relative strength, and I want to pull up this, and we're looking at the relative strength compared to the SPX. I don't want that. I want to look at this compared to the SOX, the semiconductors, okay? The industry group, okay? That's all I did there. Now I'm going to click on apply, click on OK. Now remember, the foundation of what we talk about is really kind of two things, right? Number one, looking for the price above the 10-period moving average. That's a foundational concept. And the second thing is looking for outperformance compared to the S&P or the sector or the industry group or all the above, okay? Now, the red line represents the SOX, and the green line right there represents the relative performance of NVIDIA compared to the benchmark of the semiconductor industry group. So that line is kind of getting further and further away from that benchmark. Now, what I want to do just real quick is I want to do an example trade on this, okay? Now, if I were to ask you a question such as, hey, where do you see support on this chart? Where would you say that it is? If I asked to you, where do you see support on this chart? Tell me where you see it. Now, why are we bringing this up today, like right now? Okay. So first off, price is above the 10. Second, we do have the relative performance. The other part of this is that we saw the price fall down near an area of support, and what we're seeing is the stock bounce back up. Now, as it's coming back up, we're seeing a moving average crossover. Okay, so that might kind of signify a bounce, right? Earlier this week, we also brought up the concept of the word of the week, diagonal. And we talked about how when you get prices pulling back, you might get, let's say, lower highs over time that create a diagonal line of resistance. I don't care if we draw it like this or this, we're seeing the price poke to the upside. Now, if we take a look at this, I'm going to pull this up. Let's bring up NVIDIA and kind of see why that stock is doing something so different than its neighborhood of the semiconductors. Now, what we want to do is if we go back to NVIDIA, now we got through the earnings, okay? And by the way, if we look at the past earnings, the estimate was 74 cents. They got 81 cents. We will not say that that's the biggest earnings we've seen in our life, but they did surpass the expectation. But definitely would like to see that grow some more. Now, when we actually go look on Schwab.com, we take a look at, are there dividends? Well, if you count a penny a dividend, then yes, there are. But there's not really any dividend here, okay? And you're going to see that that dividend is just a very small annual yield, to say the least. Now, if we go down to earnings estimates, they are seeing from, let's say, where we were, okay, 84 cents, up to, well, the next quarter, and then going out 4 quarters from now, 116. So they're seeing about a 25% growth on earnings per share. And remember, that is the expected, not actual. Now, when we look at these numbers, they've been stair-stepping up over time, okay? Estimate, actual. And you like to see a company that, for example, has actual higher than the estimates. They're not just barely beating it, but they maybe beat it by a couple cents, okay? And now when we take a look at these down at the bottom, why is there such a difference? Now remember, growth investors, they're attracted to bigger percentages. And if we look at the net profit margins, not even a contest on the stocks that are given. And if we take a look at, for example, the EPS forecast, not even a contest. So it kind of appears like investors have kind of maybe hid themselves in NVIDIA and some of these other areas like AMD, Texas, and so on. They've kind of struggled and not been able to really keep that growth with the same percentages as NVIDIA has. So what we're going to do is we're going to take this example trade. Now, by the way, our class examples are mostly or are examples of stocks. We're going to go to buy custom. we're going to go to, let's say, with OCO bracket. Now, this class is not buy and mold or buy and hold, some people would say. We're really doing trading growth and value stocks. So if we're trading growth and value stocks, what we're going to do is if I right click on the chart, wherever I right click on the chart is pretty much that's where I right clicked. Okay, that's the price. Now I could kind of go back and say, well, where did we end up? 145.14. That was the last price that we traded at prior to the market closing. Now remember, in the after hours, you'll see this down a little bit. We're not trying to get in the after hours. So it's down slightly, about 30 cents. I'll keep this, if you want us to, I'll kind of put this slightly above where we are right now in the after hours. Many of these stocks trade 24 hours. Now, if we take a look at this, 144.90, limit GTC. And then what we're going to do is set a stop really underneath where the moving averages are. Or we could actually take, let's say, the horizontal support level. If I took kind of where the moving average area is, 138, okay, less 2% or so, it's going to get us 135.24, okay, 135.24, day to GTC, and then we need kind of go back to this, day to GTC. Now, when we look at the position size for just a moment, let's say, for example, our capital was, example given, 7,000. Okay. Now, this is kind of a nice feature if you just want to put in a dollar amount, not the number of shares. Just type in the dollar amount that you're looking to invest. Right above the dollar amount, we're going to click on that icon right there. It snaps it, and it's going to tell us it's about 48 shares. Now, if we did this and we said, okay, where might the investor think it's going to go to? And I know many of you saw this, okay? So that's why I'm bringing this up. Some might be thinking, look, I think it's going to go to that old high. That's not much of a target from where we are now. Now, who's to say you didn't get in the middle of the day? I'm not saying that, but I'm saying we got the class now. Now, the other thing is, could I maybe target that prior high at 152 and change? Sure. Those prior highs are that most probable target. Now, to go above there, now it becomes a lesser probability of that happening. If I go to the 3-year weekly chart, okay, and what you're going to notice is in the chat, we have Mr. Flag with us, okay, the Ben Watson. And what you're going to now notice is I'm going to kind of draw this and say, look, this is where we had a high. This is maybe where we kind of started. And I'm going to take a smaller measurement. Well, because I want to try to be more, well, I want to have it a greater probability that we could hit the 161. If we measure further back, you just get bigger price targets. We want to have greater chances of the stock hitting that. So if someone said, James, I'm not going to go for the 100% measurement like a channel, I'm going to go for that 161 and maybe shed a little bit below that, okay? Now, you got to remember is no one's saying that it's going to go there, but if this stock kind of reaccelerates back up in that trend, we're going to put a target right there at 166 with a stop at 135.24. Now, I'll be honest with you. I don't even look at what's the reward, what's the risk on a stock position because it's fabricated. You could kind of type in certain numbers and you could kind of get led to believe that this is a sweet setup. And it just kind of depends upon what numbers you type in. I think what might be helpful is going to the trade tab, looking at probability touching those areas that you think. I think that might be better than just typing in numbers and putting in big numbers where you get a big reward and a tight stop where you think there's a lot less risk. You're making an assumption that you're going to get stomped out at that price. So there's a lot of assumptions in there. So I just don't like that, okay? And you can do what you want, but that's why we don't really talk about reward risk because you can kind of fabricate it, okay? Now, if we take a look at this, we're going to go confirm send. Note, remember that on a stop, if it goes to that price or less, it triggers the sell, but it's saying that it could get filled at a lower price. And what we're going to do is we're going to send that order, okay? Now, the comment from Greg is, what's your time frame? And the answer is so if we kind of said doing a trade, the idea, 2 to 3 weeks, okay? So if we said at a minimum, we're thinking 2 to 3 days. I'm not thinking it's going to go up 2-3 days. If it did, hey, totally had no clue. But when we say trade, that sweet spot of a trade is probably about 2 to 3 weeks. Okay. Now, it might not ever go up there. Okay. It might go up there tomorrow. Don't have a clue. All we know is how much was invested. We know that there was a stop. We don't know where it's going to get filled, if it gets filled. And so kind of have to play that out because we can't see beyond today. Trade number one that we did here today was NVIDIA. Now, I want to go back to something just real quick. I want to go back to just real quick the Boeing example. Now, yesterday we showed the Boeing example, and it's understandable that, remember, when prices fall, there can be kind of like a lot of people that say, hey, it's been going down, and they're really they call it in behavioral finance, they call it anchoring. You anchor your viewpoints to what happened historically. But times change, right? But people still anchor themselves to past information, even though information has changed. So I just want us to kind of continue to keep an eye on Boeing. We have a position on that. We're not going to add to it, but what you're now going to see on this, and by the way, the fundamentals on that have been absolutely horrible, okay? Won't even get into that. We could pull it up, but it would probably be pretty graphic as far as probably not your typical stock. This is kind of a story where it's gone for something that's massively underperforming, and could it start to go back up? So Boeing and SMCI have kind of been those examples of maybe picking some rotten apples and seeing could they kind of maybe try to fix themselves a little bit. Now, the other one that we'll kind of keep an eye on is just real quick. Let me fast fire a couple stocks. IBM, we also have a position on as well. It had a little run to the upside, and I think Ben calls this a stiff flag. I think what he means by the stiff flag, it runs up and it kind of goes more sideways. And yesterday we kind of bullish engulfed and then a gap to the upside. That's kind of nice because that's a leverage position there with a nice little hold, and it's now just filled the gap. Oh my gosh, an example, 547 of trading the gaps in the channels. Another one. Now, the one I also want to kind of bring out for just a sec that some of you have asked, and I want to bring it up, is Meta. Now, has anyone been watching this at all? Anybody? Okay. Now, what you're going to notice is, let me kind of go back, okay? Now, some of you are not, let's say, people that look at 1 year daily charts. So let me kind of start with a weekly chart, fine. And if we take a look at this, what you're going to see on the right-hand side, okay? On the right-hand side, kind of a little run up and then a recent pullback. Now, I don't know about you, but I like to kind of look at where the pullback was, okay? Where was the pullback? There. Where was the prior pullback? There. Where was the prior pullback? Now, what you're going to notice is every time we pull back, at the bottom of the pullback, there's a red candle where the price fell, and there's a green candle where the price goes back up. And so all we're really doing here is we're kind of trying to connect the dots to see where's the angle or line of support. So if I go from this low to that low to that low, we got 3 touches. Or if I go from this to this, that one, we're pretty much getting 3 touches. But nevertheless, we're pretty much getting to the same level. Okay, so we don't have to fight. Now, if we zoom in on this right-hand side, what do you notice in terms of the color of the moving averages? Okay, well, what you're going to take a look at here, we see the moving averages. The 10-period moving average, green, 20-period moving average, green. We got really 2 of the 3 setups, right? We don't have the crossover yet on the weekly, but you close like that, there's a really good chance that these lines start to come closer and closer together, and you probably get a crossover. But you got to remember, you got to have more. You got to have more price movement to get those weekly charts to change. Daily charts, we can already see the crossover happening. That's why people look at the daily charts, and that crossover was at the latest November 26th. Okay, and so we see a little squirt to the upside here and a nice little run. Now, let me ask you a question. If I said to you, where do you see the line of resistance, what would you say? Okay. Now, I remember, Ben, I told this story, but I'm going to tell it again briefly and quickly. So Ben and I were driving outside San Francisco, and Ben was kind of giving me a lecture on old resistance becoming new support. And he goes, old resistance becomes new potential support. Okay. And I grabbed the steering wheel and I said, hey, no, hey, buddy, not right now. Okay. Don't lecture me about old resistance, new support. 2 hands on the wheel, buddy. and he kept his pinky on him. Okay, so true story. He kept his pinky on him. So, but I just wanted the full hands on that steering wheel. Now, here's the deal. If we take a look, now, Ben, do you remember that? Don't act like you don't. Now, here's the deal. If we kind of said, where was the old highs? Okay, 600, 600, 600. So we're kind of sitting here. Today we went to 617. So let's just say, for example, let's just say that stock breaks out, makes a brand new high, and that stock maybe kind of comes down in the vicinity of, now here's the deal. Some people say, I'm going to wait for it to come down to 600. Perfect. Well, you're waiting for a perfect scenario. Maybe it doesn't come down all that way. And by the way, if it doesn't, that probably means it's stronger than you think it is. So let's kind of say that we put a buy limit order kind of in the vicinity. So if we had support at 600, what's 1% above that? 606. If we actually said, hey, I got support at 600, I'm going to add 2% above that, well, it'd be 612. So a lot of times technicians, they're trying to buy maybe 1 or 2% off support. And let's kind of talk about, so what we're going to do is we're going to kind of put a little buy right around the 606, okay? Buy custom, okay, with OCO bracket. Now, what I'm going to do on this, let me just do this okay, we'll stick with this. We're going to go back to that figure we talked about, okay? So we're going to put that right there. That's the number we're using, just an example given, okay? Now I'm going to show you an example on Costco where you think this is a small amount, can't do anything. We'll show you, okay? Now what I'm going to do is going to go day to GTC, which stands for good till canceled, and now on the stop, okay? So remember, on this limit order, this is saying buy at that price or better. Okay, so if you're a buyer, you always like to buy at that price or less. It's a limit order, the limit of what you're willing to pay. Now, I'm going to change that to GTC. Do we know it's going to come down to that area? No, we're going to try to get filled, though. Okay, come to the target in just a moment, but the stop underneath. Now, what I'm going to do is I'm going to take this 600 threshold, and I'm going to set that stop less 2%. Now, we're going to look at the fundamentals in just a second and say, why is it moving so much? Is it out? I mean, is the sector kind of coming back in favor? Is it the industry group? What is it? Now, when you take a look at this and we look at this 600, less 2%, we get 588. Going to come back down, 588. Here we come. Now, before we do look at the target for just a moment, let's kind of take a look at what we have here, okay? Now, I'm going to bring up Meta here, and what you now see, if I scroll down, now, first thing I want you to kind of see is when we scroll down a little bit, Meta historically did not pay dividends, but recently they've started to pay some dividends. Now, they're not huge. That yield is still more of growth characteristics, right? If you see something probably less than 2%, probably more of a growth stock. They're taking a large majority, okay, of their earnings and reinvesting it back in their business, among other things. Now, when we also scroll down here, you're going to see that when you look at their earnings estimates, they're pretty consistent. This is kind of one of the negatives of growth stocks, that you don't typically just get something that is super consistent. But for a growth name, you'd probably say that's pretty consistent. And you have to remember that there are some times where the business might be cyclical and or seasonal. Home Depot, right? Maybe in the springtime, right? People doing projects, or summer, right? Let's say a retail store at the mall, right? It can be seasonal, Christmas sales, whatever. Now, when we look at the historical earnings, they have beat it. But the big thing is when you take a look at this, I want to kind of look at this. Just because it's high priced doesn't necessarily mean that the forward PE is really super high, because it's not. So a lot of times investors, when you look at a regular PE, you're looking at trailing earnings. A lot of investors like to look at the forward PE, okay? And if that forward PE is probably less than 30 for a growth stock, it's probably not as expensive as you think it is. Now, wait, why is that price earnings 28? And why is the forward PE 27? Well, it's with the idea that the denominator, earnings, grows and it pushes down that multiple. Okay. By the way, when you look at the PEG ratio, it's only 1.66. Okay. Now, so this probably shows us why some investors were talking about it. Now, who is in the space? You got Meta, Google, okay, Baidu, Match, and actually ZD. Now, when we actually look at this, and I'm going to kind of open this up for just a moment, when we look at the growth forecast, now you got to think about something. Why do people invest in something? Is it for something that the company has already done? Or is it, for example, let's say what they think it's going to do? I mean, do you weight those equally? Well, probably not. You're probably saying, look, what does the company think they're going to do? I'm going to weight that at 75% or 60% and the past 40% because what already happened. Okay. So when we look at these numbers, it's not even close really who the horses are. It's really Meta at 17%, the growth forecast, and 21 on Google. I want to come to Google in just a moment. Net profit margin, who is cranking, okay, those margins? It's really Meta. Now, let me kind of show more for just a second. And if we look at these kind of numbers, if we take a look at this, when you look at the group, and this is what I'm telling you, I don't think people really look at this. A lot of times it's not even close. There's always going to be probably 2 to 3 stocks. When you look at return on assets, return on equity, it's just dominating. And this is why some people get so annoyed when 2 or 3 stocks in the sector are just blowing everyone away. It's because they usually dominate the space, okay? Any of their competitors that are really good, they probably buy them up and just grab that stuff that they actually had that made that company special and then turn it into what Meta does or Google does. The people with those larger income statements, balance sheets typically win over time. And now what you're going to see in this case is we pull this up. When we look at, let's say, the even some of these other numbers down here below, and we look at the annual growth, we can see those on the 1-year forecast, earnings per share forecast, 51%. It's going to be pretty hard to find companies that have that number. Now, we've got to take that number with a kind of a little grain of salt. They might have had kind of a very slow year last year or invested a lot of their earnings in the form of CapEx, right? To build their business, okay? You can think of like R&D or physical investments, right? Where they just didn't earn a lot. They spent it, okay? And so when you see a number where it snaps back 51%, that is highly likely what that was, and they have invested a lot with the AI and so on. Now, what you're now going to take a look at as we pull this back up, let's kind of bring this up here with Meta. Now, what I'm going to do here is I'm going to kind of draw, and we're going to show 2 different ways, right? So remember, our kind of idea, if we kind of said trade, we'd kind of be thinking about maybe like a 2 to 3 week target, okay? Now, just because we said a target doesn't mean it's going to hit there, of course. But what I'm going to do is I'm going to kind of draw from not the lows, but the highs. Now, if I'm going to draw from some of these highs, I got something probably like this, touching a bulk majority of it, not everything. But if I were to kind of look at this, I might have something resemblance of a channel here. And I don't think I'm going to get to much of a difference here. If I looked at kind of the first angle, it's pretty much where we are now. If I look at that second angle, the first line that I drew, if we went straight up. Now, if you go straight up, I'm not saying it's going to, but if it does, you're not really factoring in how time might play into this. If we set a target straight up from where we are now, you're just not, you're trying to have a greater probability of it hitting it. If I just kind of move it over maybe a week or so and say, where's that price? It's pretty much right at 650. Now, I want to kind of also talk about percent, okay? If we talk about something where it goes up 6 or 8%, that's a trade. If it goes up, let's say 8 or 10%, that's a decent trade. If it goes up 10 plus percent, 10 or 12%, that's a better trade. If you're saying I'm expecting a trade to go up 20% in a 2 or 3 week period, that's like a home run grand slam. So when we take a look at this, if we said, look, we think it could go from 617 to 650-ish, it's 33 points. Well, 33 points on 606 is the entry we're trying to get into. Let me kind of take that back. So we're trying to get in at 606 to go up to 650. So that the reward potential, if we got filled, is 46 points. If we get in, if we actually get filled in at 606, it would really be about a 7.5% move. Let me repeat myself. We're trying to get in that gray bubble, 606. If we go up to about 650, that's 46 points. The investment, about 606. That's about 7.5%. Now remember, if you start saying, I'm expecting it to go up double digit, man, you got to really have a big trade. Some traders might say, look, I'm willing to take kind of a smaller percentage move and try to have that more frequently. So what we're going to do is going to come back, going to put a little 650 price target right on it. Now there's the capital, there's the shares. Now remember how the stop works, okay? If we go to that price or less, it triggers to sell. It's not guaranteed that it's going to sell right at that price. It's a stop order. It's a market order, okay? Now, the one thing I want to do to come back is I'm going to go to confirm and send. And what we're going to do is we could read this down at the bottom and we're going to send the order. So first trade we did was which one? What was the first trade example we did? Okay. Now I'll send that. What was the second example that we did? Just to make sure you're paying attention. Okay. Now the other one that I'm going to just kind of verbally, or visually show is, actually, heck, we're going to do this example because really this was the other stock in the same space. And it's also consistent with what we talked about on Monday. And on Monday, we talked about diagonals. And someone asked me the question, like, how do you find stocks that are really breaking diagonal lines of resistance? Okay. So number one, we would be looking for a stock, okay, in trend number one. That means price below both moving averages. So that means the price has recently fallen. What might give us the idea that that stock is starting to come back up again? Well, pretty simple. Price gets above, you're going to see that the price gets above the 10-day EMA. So what that really means is if you start to see that moving average column where it goes green and it's up 1 day, 2 day, etc., that is a really good idea that stock, was selling off and starting to come back up. Now, the other thing to kind of note here, if we actually said, hey, stock is in trend one, what would it probably be showing on a week percent? It'd probably be down. Okay. What would it probably show on a month percent? Down. So that's why sometimes it's not a bad idea to, for example, let's say look for stocks that have recently been down. So if you looked at the week percent, the month percent column, right, they might not be positive. But if we start to see, let's say, stocks that have underperformed, okay, and that stock starts going back above the 10-day moving average, and then if it really starts going up, the moving average cross over, it's just more confirmation of reversals, okay? Now, put that right there. So what we're going to do on this trade, let me come back to this. Trade number 3. It's in the same space. Now, if I pull this back up, we're going to go back to Google. Okay, good. And what you're now going to see is a little crossover. Okay, we're going to right-click on this. Now, by the way, notice this big up move. Okay, we had this gap down in price, sells off aggressively, sells off. We've soaked all that back up. And sometimes that might be viewed as a win for the bulls and that the bears are losing control. Okay. Now, if we take a look at this, let's kind of say we use that same figure again. Okay. Let's mix it up. Let's say 7. Okay. Now, what I'm going to do is the entry is going to be pretty much right at today's closing price. To be consistent, you'll see that price there, okay, and there. Now, if we kind of said, look, I'm going to set a target where I think it could go back up to, well, let's say we kind of said maybe right up here. Let's say we said, James, I'm going to look to play a little swing back up to that prior high, 182. Now, could you have done this trade 2 days ago? Yes or no? Could you have done that trade 2 days ago saying that, James, I wanted to get a crossover? Okay. Now, do you notice anything unusual about yesterday's candle? You notice anything unusual? Do you notice first off that it only went down for 1 day only to go back up again? What does that tell us? Momentum. Say it. Say it. Say it out loud. Scream it. Momentum. Okay? Now, here's the deal. On the down day, we didn't even go down to the middle of the green candle. What does that tell us? Momentum. I still can't hear you. Momentum. Now, here's the thing. If you have retail mentality, I want a deeper pullback. I want a deeper pullback. Look, sometimes you have to wonder if people are just saying that so they have an excuse. You got to ask yourself, you really trading the chart, or are you trading those emotions? Is it working? Maybe not. Maybe this is why I'm going over this and spending 2 minutes on this, right? I've said this for years. If you go down less than 3 days and you see the price going back up, other people are buying it and they're knocking up the price. So the biggest actually thing is if we go down short in duration and time, 3 days or less, and then you look at the percentage drop that it had from the high, and it doesn't even come down to the middle of the recent green candle, it's stronger than you think it is, okay? So here's the deal. We don't care, oh, it's the highest price has been in 1 week. Who cares, okay? So the biggest thing is we're going to go back to the 182 price target. We're going to set a stop, and I've done this probably since about 2005. I'm going to set that stop right underneath today's open price. Sometimes after red candle, the open price can act like a higher low and or support. Well, where's the price? 171, okay, 11. And what I'm going to do here is I'm going to set that stop right at 167.68, okay? Now, I'm going to hold there for just a moment so people can see that, and I'm also going to kind of wrap it up, okay? Now, the big thing is here. So we talked about the first trade we did here today was NVIDIA, okay? Second trade we did was Meta. Third trade we did was Google. Our real focus was really finding stocks that are dominating their sectors, industry groups on the charts, but also dominating on their margins, okay? Now, when we also take a look at this, we're going to confirm and send. We could read what's in red and verify that's something that we would consider. Now, let me speak to just fast fire a couple stocks for just real quick. Costco, you're going to see, we kind of talked about maybe Costco going to 1,000. I never made it to Costco, okay? I had cold feet, okay? And I didn't lie, okay? Facts changed, and I decided I wasn't going to go in there. Now, what you're now going to notice is still have the 16 shares, recently purchased, it's up a couple dollars. I mean, who's paying attention? Now, if we take a look at also another one that we're going to kind of keep an eye on is we see that Netflix, I'm going to fast fire a couple. Netflix, for example, kind of sitting up right in that little, maybe a little wedge, if you, symmetrical triangle, getting a little push there. Keep an eye on that. The other one that we actually saw was a pretty big push, and I've been saying this, keep an eye on PayPal. There's something going on PayPal. When you look at the kind of some of the moves we've seen on the chart, something kind of just seems unusual there, okay? PanW, Fortinet, Adobe as well. Those are others that we're going to keep an eye on. Now, I got to wrap this up. If you said, hey, James, where can we actually find you when you're not teaching? I do post quite a bit on X. So if I'm not teaching, you're going to see me on X. Now, a lot of times what you're going to notice is I post some things that might be educational in nature. I also post some things that, for example, where maybe they're more humorous, or I think they're humorous, but other people don't think so. That's fine. So I kind of thought to myself, after 2.5 weeks of being sick, maybe I ought to put my name on the water tower, and maybe that would make me a little bit better. Now, also, I do post announcements. For example, like, hey, if I'm going to be teaching and I'm going to be having a class, I post that link right there as well. So that's a way that I communicate outside teaching a class. So follow Ben and myself on X. That way you can actually see what's going on. Okay, and Ben posts there as well. And so just kind of want to give you a quick reminder that also we have a playlist for this class, okay, which is right there. And also, if you have not subscribed to the Trader Talks channel right on YouTube, go for it. Smash that subscribe button, okay? And that way you can have all of our content right on your mobile device. And also, you just can have that right at your fingertips, right on your computer. Now, remember with what we discussed here today, I want you to go out and practice finding some of those companies that really have strong margins and that are dominant in their sector and or industry group. I want you to find some recent examples of some crossovers where they're getting bounces and breakouts. Coming up tomorrow morning, we'll kick off with Future. Stay tuned for that. Remember that all investing involves risk. Thanks to Ben and all of you. And I wish you a great day. And this has been the class on trading growth and value stocks. Thank you so much. And I'll see you back tomorrow. Take care. Bye-bye.